So good afternoon, everybody. You're welcome to People Trading Academy. This afternoon we are talking about currency correlation for effective risk management. Okay. So what I mean is currency correlation for effective risk management. Now, let's talk about currencies correlation. So let's talk about currency correlations, right? So the thing is, in the dynamic world of forex trading, managing risk effectively is as important as identifying profitable opportunities. We all agree that if you are managing your risk properly, you will end up being profitable because risk management is one of a valuable tool for trading in the financial market. So both institutions, investors, everybody learns to what? To manage their what? Their risk. Now, how does currency correlation comes into play? By understanding different currency pairs that they move in relation with each other, you can easily make a smart decision. Meaning that for you to know that, oh, okay, this currency moves, studying the behavior of one currency from another will give you a bigger edge, right? We give you a bigger edge in what? In currency correlation. So you'll be able to understand the relationship between gold and dollar. Be able to understand the relationship between dollar and what? And pounds. Pounds, right? So these are one of the reasons why you should understand what currency what correlation is all about, right? Okay, so let's continue. No, so currency correlation refers, statistically refers to the statistical measure of two currency pairs moving in relation with another. Okay, just a moment. I think I need to go back. Uh, just a moment, please. Sorry, please. So it refers to statistical measure of how two currency pairs move in relationship to each other over a specific period. So we have something they call correlation coefficient, right? So if it is correlation coefficient plus one, if the coefficient is plus one or minus one. So if it is plus one, it is a perfect positive correlation, meaning that two currency pairs will move in the same direction. So when we are talking about positive correlations, we are talking about two markets moving in the same direction. So it means that if this currency pair is buying, the other currency pair will buy. And if we are talking about negative correlation, we are saying two currency pairs moving in what? Opposite direction. So if one is buying, we should look towards the other as what? For selling. So zero correlation means that the two movements does not move each other. Okay, so they are not related. So don't forget what I'm trying to say. The major context in this trading or in this class is to know if they are what positive correlated or negatively what correlated. So positive correlation, we're talking about two currency pairs moving in the same direction. Why negative correlation? Two currency pairs what moving in what different direction. Okay, so that is that for correlation. Now, so for example, USD and USD are typical examples of positive correlation. Okay, so because they move what in the same direction due to their shared link with dollar. In fact, it's not only Euro USD alone. So let's say currency pairs like AUD USD, Euro USD, NZD USD, GBP USD, they move in the same direction because they are having dollar as the fourth currency pair. Okay, they are having dollar as the what? Fourth currency pair. So their correlation is quite not fully positive. So they are, I mean, not fully negative, right? So they are positively correlated. Okay, So, for example, now you're on a trade, you want to see Euro USD and you're buying Euro USD. If you're buying Euro USD, they should know that what GBP USD, AUD USD, NZD USD will also move in the same direction because they are being correlated against what they are being paired with dollar, and dollar is their quote currency. Then we now have Euro USD and USDHF. They are negatively correlated. Yes. Why? Because for Euro USD, dollar is the quote currency. For USDHF, dollar is the base currency. So they will not move in the same direction. And don't forget that in trading, most of the things that are affected is the base currency. So if Euro USD is going up, USDHF will what? Will come down. I like that if Euro USD is coming down, USDHF will what? Will go up. So they are negatively what? Correlated. Okay, so let's look at examples of currency with positive correlation. Yes, please, you need to understand this very, very well so that when I see some pair, Mr. James has a question. Okay, so what question do you have before we continue this slide? I just type a question. So when we're talking of currency correlations, right? Positive correlation of currencies, it is not a must to be USD CHF or USD CAD. There are some currency also that move alongside or in line with dollar. So you can write it, you can write this down or snap it. By Wednesday, you are going to do the practical aspect of it where you are going to say. So USDJPY, USCHF, USD CAD. If they are going up, if they are bullish, we should expect bullish sentiment on Euro AUD, Euro CAD, Euro GBP, and what? Euro NZD. In fact, I know more about this Euro GBP because they are correlated with dollar, right? Because it means that if some currency pairs like USCHF, with your analysis, you are seeing some bullish sentiment on this analysis. You can just go to Euro AUD. You will see buys there because they are what? Positively what? Correlated. You can even check Euro CAD. You can check Euro GBP. You can check Euro NZD. Okay, they are what was positively what correlated, meaning that if USDCHF is going up and you want to take more positions, you can also take more positions on what Euro AUD. Okay, you can also take more positions on what Euro AUD. You can take more positions on what Euro GBP. You understand? So these are currency pairs that you should also look out for. And it makes your trading very easier because when you are trading, you will be able to see. So we'll be able to see that, oh, okay, aside from this opportunity, probably you enter a signal, you're seeing a signal that said sell USCHF. Then you should look at some of these other pairs like Euro AUD, Euro Carrier GBP, and look forward to what? To selling opportunities. You understand this now? So they are these currency pairs, they are positively what? Correlated. So let's talk about pairs that are negatively correlated. Of course, if Euro USD is going up, you should expect USD CAD to fall. Okay. So negative correlations means that they are both going in opposite direction. So let's say you have a trade on USD CAD, you want to trade USD CAD, and you're also looking for another opportunity. Once you are buying USD CAD, you are looking at your chart that USD CAD and Euro USD are moving in the same direction. You should know that your analysis is not correct. Something is happening in the market that needs a real correction. But you see USD CAD going up, you see Euro USD falling. Then you know, yes, something is up. The market is what? Is moving synchronically, right? So negative correlations is just two different pairs going against each other. Positive correlation is two different pairs going in the same what? In the same direction. So how do we use this? Why do we need to trade this currency correlation? Number one, in forex trading, traders often hold many positions simultaneously. Okay, so currency correlations that I'm saying, right? So why does it matter? Number one, because in trading, you might not be moved to hold more than one position. So let's say you trade Euro USD and you see that Euro USD is buying. You tempted like, okay, let me see what is happening on USD CAD. You understand? So if Euro USD is buying, USD CAD is what? Be selling, right? So why does currency correlation matters? Number one, avoiding redundant exposure. So holding two or more positively correlated position can double your risk. So for instance, you are buying both Euro USD and GBP USD at the same time, meaning that you are making the same directional bet on US dollar. That is, you are saying that, oh, okay, both of them we buy at the same time. But how about you buying Euro USD and look at USCHF and you sell USDCHF, right? So you are looking at that direction like, oh, okay, if this market is going in the same direction, probably if Euro USD is giving you loss, you are making profits in the what? In the USCHF. We also have hedging and diversification. So you can also, negative correlation is very good for hedging, yes. So probably you are in a trade and USD is going against you. You can to panic. Just sell what? USDCHF. Because as USD is going up, there's high tendency that USDCHF will be what? Will be dropping. So instead of you to be panicking, getting scared or all that, just enter what? USDCHF. So when you sell USDCHF in the opposite direction, you are going to hedge that account, meaning that you are not going to lose as much as the risk that you're supposed to lose. So hedging and diversification is part of them. Then we have portfolio balance. So correlation helps you to build a diversified forex portfolio. So trading, trading is not just about trading different currency. It's about understanding how those currency behaves. So let's say you are a fan of Euro USD and you have been trading Euro USD all the time. Okay, if you have been trading Euro USD all the time, then you should know that as the Euro USD is going up, what will happen to the GBP USD? GBP USD is go up, AD USD is go up. So when you see that Euro USD is going up, you can enter GBP USD, you can enter AD USD because you are all moving in the same direction. Okay, so do we understand that? Okay, so we are predicting movement. So in one currency pair with a known correlation start to move, trader can anticipate potential movement. I've said this earlier. So if you see, let's say for example, a signal is given on GBP USD to buy, you can easily buy GBP USD. You go to AED USD, go to NZD USD, you go to Euro USD and buy. Then if you have much more time, you can look at selling USHF, USD CAD, and USD JPY. Okay, so with this, you can be able to know the direction of other movements even without looking at the chart. Okay, so I think those are some of the 4 points that I have for for currency correlation. So what are the application risks? Number one, risk management, position sizing adjustment. All you just need to do, you spread your what? You spread your lot sizes. So if you are in a trade, probably you have $1,000 account and you are trading with 1% or you want to trade with 2%, that is $200, right? So instead of you take one position with $200, you can divide them. You can take 0.02 on gold, on Euro USD, 0.02 on AUD USD, 0.02 USD, and all that. Because their movements are not the same, but their direction is the same. So Euro USD might give you the profits before Euro USD might have hit CP, AUD USD might just be warming up. But because you know that Euro USD have hit CP, definitely AUD USD will move in that direction. So position size and adjustment. Secondly is what? Hedging strategies, just like what I said. So for some people, some of you that are looking at losing your account, or probably you are looking at, oh, okay, you don't want to lose your account, or you're at the edge of losing your account. Instead of to start panicking and running better. If you are trading Euro USD, you can just trade currency pairs that are not, you can negatively correlated to Euro USD. If you are buying Euro USD, you can sell USD CHF. Okay, so you doing that, you'll be able to what? Hold two positions, and with that, you will see that your account will not be what? You will not lose the account. Because if you don't USD will give you profit, if you don't USD is not giving you profit, USCHF will what? Will give you profit. Okay, so avoid overlapping trades. Yes, most people most people trade one market, they have different views on different markets. So instead of it to stack and then stack one position or another, you can take multiple positions amongst different pairs. So using correlation to confirm setup, yes. So if probably for some of us that are using PE Prime software, if you don't know, we have PE Prime as a software that helps traders to trade. So if a signal is being given you on Euro USD and you miss that signal on Euro USD, you can check GBP USD for confirmation. So if the signal is giving you Euro USD to buy, you can check GBP USD for also a what? For also a buy session. Also, you understand it now? So or probably market is on the support level, look at Euro USD and it's giving you some bullish right. If you are not convinced, you can look at GBP USD also for the same thing. Do you understand it now? So that is that on what? On currency correlation. So currency correlation is a very powerful concept that when used properly, you'll be able to what? Manage your risk. It also helps you to reduce redundant exposures of your trade. You enable hedging and all that. It also provides insight in market relationship. You'll be able to understand what AUD and NZD is doing. If AUD is buying, definitely you should buy NZD. And definitely you should sell USD car because what they are negatively correlated. Okay. So for serious forex trader, understanding correlation is not optional. It is a must for you to understand what correlations. So by regular viewing of correlation data and incorporating it into your trading plan, you can turn a complex market into a more structured and what manageable environment. So in essence, currency correlations allows traders to be not just active, but what strategically active. So with the aid and the idea and the knowledge of currency correlation, you'll be able to know when to buy and what when to sell. And you can also know the time to buy, if this is the right time to buy, because if you're looking at AUD USD moving up, right, you should see that GBP USD and SZD USD should also move up. Okay, so that is that on today's class. On Wednesday, we are going to show you the practical view of this class, this session, the, the practical, and how you can also apply them on your trade. So, pending to that, any question, please? Does anybody have any questions on correlation class? Any question, please? Hello, any question? Hello, any question? Okay, in the absence of no questions, see you on Wednesday. Thank you very much and have a wonderful trading day. Good afternoon.